Welcome back to Investing Talk podcast. Today we're tackling a question that, well, it seems like a lot of people might be asking about a specific company. Is JAKK specific a good time to buy right now? We're going to break down the latest analysis, try to give you a clear picture of what's happening with this stock. And before we jump into the details, if you find value in these conversations, please, take a moment to subscribe, like us, maybe leave a comment. It really does help us out. Oh, and if there's a specific company you'd like us to look into for a future conversation, just let us know below. You can also consider buying us a coffee if you appreciate what we do.
It really is a classic investing dilemma, isn't it? You get these mixed signals from the market about a stock, and it can be really challenging to decide what to do. We've got a pretty comprehensive valuation of JAKKS specific here, looking at it from, short-term trading and long-term investment angles, trying to cut through the noise.
Okay, yeah. Let's unpack this then. There's quite a bit to sift through here. Fundamentals, analyst views, the technical charts. Our goal today is really to pull out the most important bits for you, help you understand not just what's happening, but why it matters for your own investing thoughts. So let's start with the basics. How is JAKKS Pacific actually doing fundamentally? Because from what we've seen, the recent news, it hasn't been great, has it?
No, not exactly sunny. And what's kind of fascinating here is the recent performance itself. JAKKS Pacific just reported a surprise loss, and they missed revenue expectations for the upcoming year, 2025. And look, this isn't just a small dip. Forecasted revenues, they're expected to decline by about 17% annually.
Wow, 17%.
Yeah. And if you put that in context, industry peers are generally expected to grow maybe around 3% annually. So that really highlights a significant weakening of JAKKS Pacific's business fundamentals compared to its sector. It's a pretty stark contrast.
Okay, so that big revenue drop, what does that typically mean for things like profit and cash flow? Are we seeing that hit yet?
Well, the specific detailed numbers for profit margins and cash flow, they weren't actually provided in the material we looked at, but that earnings miss. It strongly suggests the company is facing some real margin pressure or maybe cash flow challenges.
Makes sense.
Yeah, when you miss earnings like that, it often points to costs getting ahead of revenue or maybe just operational issues. Debt levels also weren't detailed, so we can't really assess that part directly from these sources. Leaves a bit of a gap, unfortunately.
And what about JAKK Pacific's actual position within its industry? You mentioned peers growing slightly. Where do they fit in?
Right, so they operate in consumer durables, specifically the toys sector, and that whole sector seems a bit weak right now, actually. JAKK Pacific was specifically flagged as being in a weak industry group. Plus, there isn't any really clear indication of a strong competitive advantage. Like a killer brand license or unique tech that sets them apart.
So no strong moat, as they say.
Exactly. And in an industry where growth is already sluggish, not having that moat makes you pretty vulnerable to, pricing wars, shifts in trends. That's a worry for the long term.
Okay, this is where it gets really interesting for me. We've just heard about, frankly, some pretty tough fundamentals. But then you look at the valuation side, and the analyst outlook seems, surprisingly bullish. What's going on there? It feels like two different stories.
It is quite a contrast, yeah. While we don't have specific PE or PS ratios from our sources, the analyst price targets average around $41.75.
$175 from where it is now.
Exactly. It's currently trading around, $18 to $20. So that target implies an expected price jump of over 130%.
Whoa.
Yeah. So it suggests that, at least to these analysts, the stock is seen as significantly undervalued right now relative to what they expect for its future. It's a big bet on a turnaround.
Okay, but let me play devil's advocate. 130% upside sounds amazing, but couldn't that just be analysts lagging behind the bad news? Or maybe just being overly optimistic? What are the caveats here?
That's a really important question. And the details on, say, intrinsic valuation methods, like a discounted cash flow analysis, they weren't available in what we reviewed. So the valuation picture ends up looking quite mixed. You've got this weak financial performance recently on one hand.
Yeah, the 17% revenue decline.
Right. And then on the other hand, these really quite optimistic analyst targets, it really highlights this tension. Are the analysts seeing some hidden catalyst coming? Or are they just behind the curve on the current reality? It forces you, the investor, to weigh that hope against the hard data we have now.
Okay, so we've talked about fundamentals. We've talked about what analysts think it might be worth. But how has the market actually reacted? Let's switch gears to the technicals. What are the charts telling us?
Well, the stock is showing a classic death cross pattern.
Uh-oh. Sounds ominous.
It often is for technicians. It's where the shorter-term 50-day moving average crosses below the longer-term 200-day moving average. And on top of that, the stock is trading below both of those lines. And the 200-day average itself, it's sloping downwards. So all these things together consistently signal a strong, established bearish trend. Downward momentum seems firmly in charge right now.
And has the recent price action actually confirmed that bearish signal? How has it performed lately?
Oh, absolutely. The price has fallen over 40% just year to date.
40%? Wow.
Yeah, that's a really significant drop, especially when you consider the broader markets have actually been rallying for much of that time. That underperformance is telling. Volatility is high, and there's just no clear upward momentum in the price action. While we don't have specific RSI or MCD numbers cited, that huge 40% decline and the death cross pattern, they strongly suggest bearish momentum anyway.
Okay, so given all of this, the fundamentals, the technicals, the analyst views, what's the overall feeling, the sentiment around JKK specific right now, it sounds like a real mix.
It is definitely mixed, yes. That recent earnings underperformance, it did cause analysts to cut their price targets recently by about 8.2% on average, so there was some reaction.
Okay, a slight adjustment down.
Right. But even with that cut, there's still a strong overall analyst consensus rating of strong buy.
Yeah.
And those price targets are sitting between $40 and $46, which again suggests roughly a doubling in price over the next year. It's a really fascinating split.
So to recap, the technical picture is weak, the recent fundamental news is weak, but the analysts are overwhelmingly bullish. That's a huge disconnect. How do we make sense of that as investors?
Precisely. It's a puzzle, this bullish analyst view. It could be reflecting really high expectations for some kind of turnaround, maybe new products, maybe a strategic shift we don't know about yet, or it could just be a belief that the stock has fallen so far, it's just deeply undervalued, even with the current problems. It's a bet on future potential. We don't have data here on things like insider buying or social media buzz, so we're mainly relying on these reported analyst views. It really shows how different market players can value the same thing very differently.
Right. So what could actually shift this story? Are there any potential catalysts on the horizon for JK specific? What should people be watching for?
Well, earnings reports are going to continue to be absolutely key short-term catalysts, especially if they somehow show signs of recovery after these recent losses. A positive surprise could really change the mood. Beyond earnings, though, the sources we looked at didn't really mention any specific major product launches coming up or any M&A talk or big regulatory changes that could act as immediate catalysts. And we always have to remember the macro picture, too. Things impacting consumer discretionary spending, the overall economy, inflation, confidence, those could definitely affect this stock. Toys aren't usually top priority in tough times.
Makes sense. So putting it all together for potential investors, given everything we've discussed, what are the main risks they need to be aware of if they're even thinking about this stock?
Okay, risks. Company-specific ones include, well, those fundamentals continuing to deteriorate, more earnings misses, revenues keep falling, and that weak industry environment is a headwind too, makes it harder for anyone in that space. Technically, the risk is that persistent downtrend continues.
Right.
And the high volatility means sharp drops are possible, making it tough to time an entry. Broader sector risks relate to the economy, consumer spending, as we mentioned, toys are discretionary, and finally, those big price swings and the analyst disconnects suggest maybe some liquidity issues or just unusual trading volatility can make it hard to get in or out cleanly.
Okay, understood. So after digging through all this analysis, if you had to put a number on it, give JKS Pacific a rating. What would it be, and what's the overall recommendation?
Based on everything, the rating here is a 4 out of 10.
A 4, okay.
Yeah. And look, despite those really optimistic analyst price targets, the current fundamental deterioration, the really poor technical picture, and the weak sector, they just present significant risks right now. That bullish analyst view feels quite speculative, or maybe it's just completely dependent on a turnaround that, frankly, we just don't see yet in the data.
So for someone who is maybe thinking about a speculative entry, given those analyst targets, what's the advice on timing or price?
Well, if you are considering a speculative entry, and I stress speculative prices near the current levels, maybe around $18, $20 might seem like value if you buy into that turnaround story. But honestly, a very cautious approach is needed here. Ideally, you'd want to wait for clear, confirmed signs that the fundamentals are actually improving.
Like better earnings reports.
Exactly. Maybe a couple of quarters of good news or at least stabilization. Or wait for the stock price itself to show a sustained uptrend. Trying to catch a falling knife is usually not a great strategy.
Right. And who is this stock really suitable for then? Is it for long-term investors or more for traders?
Given the bearish technicals and all the fundamental uncertainty, JAKK specific currently seems more suitable for experienced short-term traders, people comfortable with high volatility and high risk. They might try to play quick bounces or trade around news events, but they'd need very tight risk management.
Like stop losses.
Absolutely. For short-term trading here, maybe a stop loss around 10–15% below your entry could help limit losses, given how volatile it is. Initial profit targets could be near those analyst levels around $40 plus that, but you'd have to constantly adjust based on momentum and if the fundamentals actually start changing. It's definitely not a buy and hold situation right now for most people.
Okay, so wrapping this up, JKCS Pacific seems to be facing some pretty serious fundamental and technical headwinds at the moment. That strong analyst consensus for a big price increase is definitely out there, but it seems to reflect high hopes for a turnaround that just isn't backed up by the current performance or market trends yet. It's hope versus reality.
It really highlights an important lesson, doesn't it? Even when analysts sound incredibly optimistic, you absolutely have to look closely at the underlying financial health and the market trends yourself. Sometimes the smartest thing an investor can do is just be patient. Wait for clear signs that a company's prospects are genuinely getting better, rather than just relying on projections about the future. Understanding the why is critical.
Absolutely. And knowing when not to jump in can be just as valuable. It raises a question for you, our listener, to think about as you navigate your own investments. How much weight do you give analyst ratings compared to a company's current performance and the market trends? Do you bet on the story or wait for the facts to improve? Something to consider. That's it for our look at JAKKS Pacific today. Thanks for joining us on Investing Talk Podcast. We'll be back soon with another conversation about what matters to you.